As always, right, welcome in guys to our Legacy Circle study group every Sunday. Um, we do this once a month. We bring the my good friend Mr. Marcus Morpheus McKinney. We do our ETM session. Um, and I have to get with him to see what's our next schedule on that. But if until then, right, we'll continue doing the Legacy Circle study group here. Dan also has his. I'm not sure we're going to officially. Hopefully, we can, Dan, move it officially from Monday night. I think it works best. But I do like that.
I'm gonna leave that though officially from now on Monday nights.
Awesome.
That works
Yeah,
out great for me as well.
yeah, it works out great. We get it here nice and early. The people miss for whatever reason. They get the recording, and and then we get them back on Monday. But yeah, welcome in everybody. Sunday, August 24th. I'm your host, head out of the G Money Pies. And as always, right, these sessions are for educational purposes only. Any trade idea or suggestion is pure speculation on my end. But let's make sure that we trade responsibly, know how to manage our accounts. But most importantly, right, do not trade any money you cannot afford to lose. So yeah, we'll recap gold. We did a little recap on that on Friday, anyways. But this was the markup, guys. This is the markup that gold left us. This is the market that we left for last Sunday, and it literally hit to the T. Okay. And again, there's just so many different ways you can mark this up, right? And I'll show you, right? I'll show you that there's like maybe at least I can think of right now maybe two or three ways to find a reason why to buy from the D point, a reason why to take profit up here, and so okay. But for the most part, this is where we left off on last week. Last week. So it was a harmonic pattern. We talked just a quick summary on the harmonic patterns. Harmonic patterns are basically M's and W's, but with kind of like certain retracement points and extension points that that's what I was going to hide. Yeah, that once it's complete, it should be a bullish zone, right? It should be a bullish zone right there. And let me hide these drawings right quick. A lot of times, the strongest confirmation of a harmonic pattern is when you actually see an Elliott wave, right? Remember the Elliott waves there's a series of five moves. 0 to 1 is wave one, 1 to 2 is wave two, 2 to 3 is wave three, 3 to 4, and then 4 to 5. Uh, Actually, let me back up a little bit because this does need to be somewhat specific. Okay, and then also too, let me hide the indicator as well. So for a harmonic pattern, right, you first need an impulse, then you need a correction. So here's the oh, yeah, we don't want to do that. Yeah, you first need an impulse to the top side. You need a correction. So 0, 1, 2. And then again, you don't know you're in a harmonic pattern until you kind of get an idea of, we get more information. Because when we see this, right, we always talk about prices either have completed its pattern or trying to complete a pattern, right? So whenever we see this, right, this impulse correction, we can literally assume that, all right, what if it's trying to form an Elliott wave, right? What if it's trying to form an Elliott wave? Excuse me. I think I said harmonic pattern. But yeah, what if it's trying to form an Elliott wave? So if I ask that question, what does that mean? What does that mean to our strategy? What does that mean to our how long are we going to hold the trade, right? And this is Dr. the Treatise where you kind of start getting more confidence of like, oh, you know what? I can get more than 20, 30 pips because I've seen this pattern before. Excuse me, I've seen the Elliott wave pattern form, and we're only right here, right? Well, what if it does complete an Elliott wave pattern? I'll enter at the 2 point. Wave 2 to 3 is usually the longest. Wave 3 to 4 is usually the pullback, is usually the shallowest. And then what comes next? 5. Okay, that's why it's important to kind of understand patterns, because they can drive price higher for us. But yeah, the rules of the Elliott wave, put here at EW. Obviously, you gotta have 1 to 2 cannot go below 0. I mean, that's an obvious one, right? But yeah, that's the first Elliott wave rule. 2 to 3, right, has to be for the most part the longest wave. Okay, the longest wave. And then the pullback from 3 to 4, the pullback cannot come and touch the same. It cannot retest 1. Okay, it cannot retest 1. And then from there, 4 to 5, there's so many rules with that. It could be a little one, it could be way extended, and so forth, right? So usually, guys, usually the Elliott wave, right, is your X to A on your harmonic pattern. Okay. So when you draw a harmonic pattern, right, you have your X, the big impulse, your A, and then you have your B, which is the pullback, and then you have your C, and then you have your D. You have your impulse, correction, pull back from the area, and there goes kind of your M, and then there goes the harmonic pattern right there. Okay, so that's what it is. Yes, Dr. Latrice. Yes, yes, yes. What was I gonna say too? Yes, I think I got ahead of there as well. I do apologize. But this is the harmonic as well completed. One second. Yeah, so let me draw this. This is what I meant to do. This is your 0, your 1, your 2, right? Give or take, this is your 3. And then right here, this push down, that's your 4. And then all this push up here gets your 5. There it goes. And that's where it gets a little tricky, right? Because see, this one actually made it high as well. This one made it high as well. This one made it high as well. But it's supposed to happen that way because you already pumped up this much, right? That the sellers are trying to find themselves up here, but the buyers are still pretty strong. And then again, we don't know yet, when is the 5 going to finish until until it's actually completed, right? And yeah, so once you do have your Elliott wave, everything to the right of 5, right? It's your corrective pattern, right? It's your corrective pattern. And the last time I was researching the Elliott wave, they were saying something about there's like 21 different variations of the corrective pattern. And that's a lot. That's a lot, right? That is a lot. So I try not to focus too much on that. Okay. But it is there. It is there. So what can help us simplify that right there? Well, let me first do this. Right. So as I mentioned now, we have that Elliott wave here, right? 0, 1, 2, 3, 4, 5. Whenever we usually see an Elliott wave completed, that's usually your X, okay, on the harmonic pattern. That'll be your X, that'll be your push up, that'll be your A, and then the corrective pattern, right, will put us like this: B, C, and D. And now there it goes, completed in that Elliott wave. Right, let me bring back in the drawings, and there it is, guys. Okay, there it is. Okay. Like Dan likes to say, bada bing, bada boom. Anything else here you want to add, Dan? Just on your.
No, I accept that, and not only is the Elliott wave important in the correction, but the harmonic pattern is a perfect Fibonacci tool, and it always aligns up with whatever as you can see, it's all based on the Fibonacci as well. We've got the impulse. We always get a retrace, but we come back to, actually, this should be around the 50, 61 area, somewhere in there. And then you get the pump back up. A test are to lovely 236. And harmonic patterns tend to fit that particular pattern. Come back and retest again at 61 to almost 70, that's 61 to 78%. And if that fails, then we get the boost up, hit this first take profit zone, and then we got the next one right up here, which is either A or somewhere at the highs.
100%. Appreciate that, Dan. And yeah, so like this harmonic pattern, right? They let me just show you how there's different ways to of this movement of where you could get in and where could you take profit. Well, you guys see the harmonic pattern, right? You get in here on the D point, and then you take profit at the C, right? Whenever you see the pattern complete, that's usually kind of what you want. C to D. All right. Now I'm going to go ahead and erase this. And again, right, this is just an impulse right here, right? What happens when we see an impulse, right? We fib it, right? We fib that impulse. So another way we could have played this is simply measure from low to high. If it finishes impulse, it came back and tried to touch. Here goes the. Let me draw like this is really important. This section here. Okay, it tried to touch the 61%. Well, at first touch kind of like got into the 50, and it found some found some resistance or some support, went back up 23%, obviously bring it down, but so I won't get into much detail. Next thing you know, we finally do touch the 61%. We get down below it. I think this one, Nico, this one was more of a Gartley one, a Gartley. But yeah, there's just to trade harmonics precisely, you do have to follow the exact retracements. There's a lot of references out there, books. I have a book, 3 volumes of it, which I think is so funny. They got harder to read each volume, and I only needed volume one.
And there's
But
so many different patterns too, which is interesting,
yeah.
And I think there's more patterns and harmonics, and that can get confusing. Yeah.
Mhm. Absolutely. And but then long story short, what happened here, right? Is here, right? We came back to 61%. Okay. And we kind of established our ground again and came back and retouched the 61% a second time. And that's where we finally launched, right? We finally launched, took profit at the extension. So harmonic pattern was one way to 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 analyze the chart. This impulse was another way to analyze the chart. If we go to like just the weekly candlesticks by itself, I believe where's it at? Yeah, so that entire swing, right, was those 2 candles that I had mentioned. That was another way to do it. Another way to do it is where you take the previous weekly candle from high to low, right? And again, what happened? Came in, touched the extension, -18 beautifully, strong bounce, and then back to the 61.8, right? Back to the 61.8. Actually, Dr. Jones, I think the Morning Star, I think it was this chart or the other. Yeah, because I do remember finding confirmation for it. But yeah, this right here is definitely a kind of a Morning Star pattern in this zone. But I thought I had better candles. I was like really obvious. Yeah, there it is. See on the OM the chart. That is a straight up morning star. Okay, there's no denying that one right there. And again, so here is yes, Dr. Juice, but on the let me see if I go back to the 8-hour chart on the Saxo, it'll be right here, right where you said the harmonic in the 61A pattern was. Wait, yeah, it was right here. It was right here. But if we kind of go back into and try to look the textbook, kind of like the BECs, right? There is a textbook BEC. There's a textbook rally-based rally. Then there are variations. I believe on the OM chart.
That is a tech. That's technically a textbook break of structure candlestick too. The one you just, you know.
Gotcha. No, yes. And
Yeah.
I see it right here. See 3 candlesticks very nicely right there. And again, right, what happens every time price creates a morning star, right? A morning star reaction. That's kind of the thing that we should be what's it called? Yeah, let me draw the fib here one more time. So that is important. Indicators. And let's do that one more time. Okay. Let's go ahead and measure the impulse right here. Right there. Okay. We got that impulse measured. Impulse correction right at that 61.8%. Right, guys? So, and here's the good example of how the market is fractal. Okay. We saw this impulse and we measured it. Okay. We saw this impulse in this direction, correct? And we measure with the fib. And we say, all right, you know what? I'm only going to buy from 61% and lower. Okay. And then from there, I want to take it. I want to take price at least to the 23%. Everybody got that? Perfect. All right. Well, then you ask yourself, well, you know what? This is just a lot of pips right here. I can't do that. It's 500 pips. Or for whatever reason, right? You do that. Again. All right. Well, you know what? I'm going to buy whenever I see, whenever price touches the 61.8%, and then I get a strong move up. That's when I'm going to buy, whenever I see that. Like, all right, there it goes. And you see that happening. And then what do you do from there? Then? Okay, well, then now you measure that move from low to high. And then what was the rule? You enter at the 61.8%. Stop loss at the low. Take profit. We normally put it at 23% based on the other rule, right? But in this scenario, the original movement had us taken it to about right there because of the higher time frame extension. Do you see that, guys? We found the same setup on different. Actually, I didn't even change time frames. Okay, I didn't even change time frames here. But you see how I just repeated that? You hit play, and there it is. And didn't the other one also hit the 61.8% twice? Here goes the 61.8%, right, Dan?
Yep.
Here goes touch 1, touch 2,
Yep.
skyrockets. And
Yep.
if I refib this impulse, okay, if I refib this impulse, as so, let me go ahead and erase that. There goes touch 1 and touch 2 in a different order. But yeah, guys, there it is. And again, that's why I've decided, just like you're right, all we got of everything that I do, like we got the SMT box, we got the ETM candles, right? We have all these patterns. The most important thing that we can teach you guys uh, is look for your impulse. Okay. And go, this is basically the 1, 2, 3 strategy, right? Dance. Yeah. Sí, sí, Pablo estaba ahí de compra, man.
Yeah.
Los
One,
dos,
two, three strategy. Perfect. Yeah.
ya, los dio dos oportunidades, Pablo. Esta era la primera, esta era la buena. Esa era la buena. Oh, I like the question, Joe. I like the question. Joe's asking, so what did the box system show at those entries? Um, but before I get to that one, Joe, this is the most important thing we can do, the 1, 2, 3 strategy, simply because it is the only thing we can control. We cannot control prices, right? We cannot control prices. And you need to look for your impulse. It could be a one push up, it could be a single candlestick, it could be structure. But once you have your impulse, you have your low, you have your high. Then you can fib it 23%, 38%, 50, 61, and so, right? Once you have an eye on your impulse, okay, from there, you at least know where to enter, where to put your stop loss, and then where do you take profit, okay? And you can do this thing on every scale, which we just did, okay, what we just did. And that's how we're going to do our top-down analysis. Yeah, Joe, on Friday, this is actually um, are you being more specific, Joe, about the push on Friday or just in general with this movement? If you're being more specific on Friday's movement, Friday the momentum was bearish. So, all right,
Yeah, I was just asking
yeah,
if you.
absolutely.
I was just asking, at either one of those two entries, what did say the 5 minute box system was it showing? Would we have entered off that, or would that, what does that look like? I
Yeah,
guess.
let's look at that. Thanks for that question. Let me go ahead and do this. I know exactly what it did on Sunday because I marked that one up. Okay. Let me see what happened here on Monday. I know Monday, I think we sold. This is Tuesday as well. We continue selling. We continue to sell on Tuesday. Go ahead and erase that. And let's go to the 5 minute chart. Now remember, for the most part, we're gonna be trading it. Um, we are gonna be trading it during the NYSE. Okay. We trade during the NYSE. So let me actually find what time is that there. It's Tuesday. Yeah. This one was, I think if we didn't buy from the bottom, this one we didn't touch. I think we and I had a quick chat on this one, Joe, where Tuesday, it just kept pumping up and we completely missed it. So here we are at the 61.8% of the bigger swing. And again, the box system has the same thing, guys, the same rule. That's why it's really important to understand the fib. Okay, we have the impulse down. Okay, and actually, just a quick glance here, as always, right? The indicator is always getting updated. I become a coding fanatic, and let me just show you guys what we have here. So I'm actually can barely see that there. Excuse me. I'm doing a little bit of update on the window. You're not can't see. I can barely see it. Let me just find this. Really gotta read this, guys. It's fine. Anyways, um, how we normally have how we normally have the 2 minute, 5 minute, 1 hour. Obviously, that's a good system to have to kind of know both. But this thing is evolving to where I have to do this. I know. This thing is evolving to kind of more of a just helping us read the structure. What does it say there? Bearish, yay. Momentum, bearish on this time frame alone. I'm working on how to communicate the timing, right? And this thing's being stubborn. If not, I would have had it updated for you guys already. But again, right? That's gonna help a lot. At a glance, all right, structure is bearish, right? So here, Joe, right? Now let's not obviously we said already that this is our 8 a.m. When price got to our 8 a.m. New York stock open, we missed this trade. Okay. So, but there it is. That's the 61.8% first touch. Again, the structure momentum timing is not always telling us to sell. It's more about, okay, which direction do we draw the fib? So structure is bearish, so we draw the fib from where? From high to low, correct? And then we color the fib that color. So then here is where everything comes in. We know how 23 is very important. We know how 78% and 61.8 is very important. And we also know how the extensions are very important. Okay. The box system has those things there, right? This area gonna be here is gonna be is gonna decide, okay, if we can get above that and the momentum is bullish, we could potentially trade it from here, right? This is your range game, right? Down to what you like to do. That's the area that like Joe like not Joe that Dan likes to trade,
Yep. Yeah.
right? But this momentum needs to turn bullish. Okay, this momentum needs to turn bullish. So we know we're already at a 61.8% to the left on a bigger scale, right? Let's see that momentum can turn bullish. Let me hide the drawings. And a few more candlesticks come in. And again, I'm not looking for, even though the structure is bearish, I'm not looking for sales, or I'm looking for a strong push up at this time because of the higher time frame that we just did, right? So there it goes. See, price cannot go. Okay, made a little bit a dropper low. So that means we have to readjust our fib. Let me see how far this is extended as well. Pips moved 325 pips. So it's normal, right? Once we get to that closer to 400, that's kind of where we have an issue there. All right, let's see. Let's see. Price is still kind of trying to make a decision. It's still kind of hovering, and there it is. But you see how we've been below the 23 percentile for some time now, and we cannot get price to trend. It's just been a battle between the buyers and sellers for a while now. And then now, and there it goes. The momentum shifted bullish. Momentum has shifted bullish. Isn't that cool, guys? Structure is still bearish, but the momentum is still bullish.
Will you explain what caused that shift again? I'm sorry, I'm still trying to understand this.
Think of those two lines, Joe, since you are a student of the Ichimoku cloud, right? Think of these two lines, Joe, as the actual cloud itself. When you know when you get a cloud twist, the front box, the small box is your span A, and your medium box is your span B. So the moment that we'll see how it was read there. When they're equal, when the midpoints are equal, they're gonna be this color. The moment the small box shifts up and its midpoint also gets above the midpoint of there, right there.
Got it. Got it.
That's first. My pleasure.
Yes. All right. Thank you.
So the turn bullish, but it's still too early to buy. And why is it still too early to buy? Well, because the 52 midpoint needs to be above at least here. And the 23 percentile. Okay. And okay, let it establish itself a little bit. Perfect. Okay, it's starting to move up. It's still not good because we can get a because this could be a resistance level right here. And as you guys see, we did get to it, and we're getting some reaction back down. Okay. To make it simple, right? Obviously, the 52, the mid 52, that is our box for entry. Okay, that is our box for entry every time. Again, there's different ways to enter, just like there's different, there. What do we say? What word did we use earlier, Dan? What about the rally base rally and the morning star? There is a what was the word that I used? It was a not a, it wasn't perfect, but it was a
Yeah, no, it skips my mind right now too.
there you go. The textbook. There's a textbook.
Textbook entry
There's a textbook pattern, like the textbook rally base rally. There's a
followed
textbook.
by a morning star followed by a rally base rally. I think that's where you're heading with that.
Oh no, I was just going to say how how the rally based rally pattern. There's the textbook one, meaning that that's like the one that sets the foundation for others. There's different variations, right?
Okay,
There's
yeah.
so there's different variations of how you can enter with the box system, right? But however, the textbook one or the first the first variation, the standard variation, right, is entering at the midpoint of the 52 box. Okay. Now again, you may ask yourself, well, gee, I mean, we have bearish structure. Why are you buying? Right? Well, momentum can take over. Momentum can definitely take over. But I'm not going to buy all the way up. I'm going to just buy maybe to about 50%, or maybe the other 70, the other 23%. And by the way, I did go ahead and add that line. It's very faint, but the line of the 50 midpoint line is right there. Okay. Very, very faint, but I did add because I think I do like it. I just don't want to have three big lines here. It will kind of uh I won't be able to read the structure properly with that. Okay. But yeah, that's the first variation or the standard variation of how to use the S&T box system. We use the medium box to enter the midpoint line. We put our stop loss at the low if you're looking for buys, and then you kind of use the other box system to take it. Let's see if it touches it, and it doesn't. It continues going up, and as you guys see, the midpoint also shifted up. All right, well, this is pretty strong. So we never enter there. We still would have been a little bit early because there now it is. See, now we got an above there. Now we got an above there. So that's good. So now we're waiting for a pullback, hopefully, to this back to the midpoint of the medium box. Let's see here. And all right, here we are. Okay, so here's our setup. And again, this is still not 8 o'clock in the morning, but see how this is shifting as well. It's shifting down as time moves. Everything, the boxes shift as time move forward. Let's see. Dr. Chu said, is that dotted line representing the 50% of the fib? Is representing 50% of the 204 box. Yep. Which in reality, we always have to adjust our fib based on that box. So yes. Yes to both of your questions. Y es otra manera también, Pablo, de analizar eso. Okay. So check this out here, guys. So then we're waiting here for the 52 mid, let it touch it, and then we go on with the stop loss at the low, and boom. Same setup. But look, the midpoint is about to expire. Actually, I was taking some notes yesterday, having a conversation with the AI, and I like how it explained the midpoint. And it has to do with timing, and it's right here. When the equilibrium or midpoint is mathematically forced to recenter because one boundary, high or low, rolls off the look back window. So each box represents a look back window, right? So the 52, okay, the midpoint's about to shift, right? Because what's creating this range, it's about to expire. So this low is going to shift up, and therefore the midpoint is going to shift price up. There you go. So the midpoint is pumping up, and we never got our entry. Never got our entry. Actually, there it is. That would have been our entry right there, guys. Okay. That would have been our entry because that is the 52 minute.
That
Okay.
was that trade we were talking about the other day.
Mm-hmm.
And where would you set your stop loss with that entry at the
Um,
bottom of the 5 minute box?
yeah, at the bottom of the 52 midpoint one, Joe. At the bottom of the 52 midpoint. Yeah,
Yeah.
so
Okay.
the standard variation is use the medium box for entry and stop loss. Yes.
Okay. Hey, G, I'm gonna have to run real quick in a minute, but I wanted to ask you another question. I'm sorry, I don't want to hijack the meeting, but on Friday when it had that huge impulse, that was a reaction to, I guess, Powell made comments or something like that, right? So it was a news event. I mean, would you call that manipulation? And and if so, what does that do with our box analysis? Does that just reset everything?
Well, yeah, every time the box system kind of just, the box system is always resetting for every new candlestick. Um, three things were happening on Friday, right? Three things were happening on Friday. The what we look at, the SMT was bearish. Okay. However, we were selling into a Wednesday's strong bullish candlestick at the 78%. And that's why I had a feeling it could have bought today, that day, and it did. And then also too, Thursday's daily candlestick was bearish, and it completed the lower low Friday in that pullback. So believe it or not, Joe, at 8:55 Central Time, the system was staying buys. Let me go ahead and rewind us there, and you can quickly see that. Where's 7:55? No, the news was at 9. See, the news was at 9. Okay, the news was at 9. So let's just say we're waiting for the news to happen, and then look at that right there. It didn't give us an opportunity to enter, right? But just based on momentum, the momentum at 8:55 in the morning was already bullish. Was already bullish. It would have been hard for us to catch an entry with the SMT alone on on Friday. But see, 5 minutes before the news hit, price balanced out to the top 23 percentile, and then from there, it did that. Boom. So the second time I've noticed this. SMT was saying buys during the NFP. It was saying buys to those news events. So the what actually happened, in my opinion, it wasn't really too much of manipulation. It was just more, it was like it needed three views of things. So the first thing that happened was this. Wednesday's candlestick. Let me show this example here, Joe. On the with the higher time frame candlesticks. Wednesday's bullish candle was bullish, and there it is. Previous day. Okay, so anytime we got to this zone here, that would have been the buyers were going to step in 60, 71, 8%. Perfect. We wait for the buy there. So price goes on Thursday. It actually does touch it and reacts bullish, but does not trend bullish, and there it is. The candlestick closed bearish on Thursday. All right, well, we fibbed the high to low because it was a bearish day. And Friday's price action or Friday's movement has been completed right there. Once we get that lower low. So if we sell during New York and we hit the extension, Friday has completed the impulse from Thursday and it's done. And simultaneously is the buying area from Wednesday. There goes time. There goes midnight. There it is. Completed its lower low. It didn't really touch the extension, but we knew this was fit 61.878%. And there it goes. It launched up very nicely. But yeah, we're getting a very good read on how to read these previous days, and allows it to really tune in. And yeah, and simultaneously, right, this was I think, Pablo, you're getting a good eye for the harmonics. There goes another harmonic.
Gee, I got to
Okay.
run. Thank you
Yes,
very
sir.
much. I appreciate you.
My pleasure, Joe. There goes another harmonic, right? Right there. There was another harmonic here that Pablo also shared with me. Here, 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 and here. Remember that one, Pablo?
Yeah.
And there it is.
There it is.
So this was X, this was A. Let's get a little fancy. Okay. One second, Archie. Yeah, and then a lot of times too, right? You can draw some harmonics like this. Like this was a bearish harmonic. Color this kind of like a red color. And take like so. All right. And you guys know that this one over here was the biggest harmonic to the top side. So there it is. Look at that. Mama bear and the two cubs. I'm telling you guys, whatever we train our eye to see, we're gonna see in this chart. Um, that's why I try this. I save this stuff for last, not to the front. Like the book, Atomic Habit, chapter 20. When you know the simple movements so well that you can perform them without thinking, you're free to pay attention to more advanced details. I'm reading your question there, Prachi. You mean like the regular trading view or like the SMT? Um, Here's one thing that I would like a favor, guys. Um, at any time you need some kind of short video, okay, or just something, hey G, I wanna give my chart set up like yours. We need to create like the sessions. We need to create some type of library for your requests just to kind of have that there. I think that's important, right? I think it helps me because again, though, I don't know exactly what you need in general, and at the same time, a lot of stuff that I do. I mean, I've been back testing so much that everything kind of just flows subconsciously. Um, but Prachi, yeah, I know there's a recording inside of the higher time frame candlesticks inside the COC. If you're not in there just yet, I can make another one and have it for our library, so you can have that set up. Okay. But yeah, that setup that is very important. This higher time frame and sessions candlestick template. Let's see. Yes. So Pablo W is sales, M is buys. Yes. Yes. Absolutely. All right. So we got about 15 minutes left, guys. We're gonna do a top-down analysis with the rules that we've been using, with the fine-tuned rules that we've been using, and I want to make sure that you follow along. Okay, you follow along, so we can see exactly how to mark up these charts from top-down analysis. So I'm actually gonna, because we have plenty of time, I may do 2 or 3 pairs using the same markup. And then from here we'll carry on. All right. So variation one. These are all variation one, not to get too complex with everything. Okay. Variation one, the standard variation of the top-down analysis. Okay. You start at the weekly chart. Okay. Top down analysis. Standard variation. That sounds cool, but I don't know if that's communicating correctly. Okay. So we start from the weekly chart, right? So step one, weekly candle, high to low. Yes. Okay. So you find the weekly candle. Oh,
Yeah.
sorry about
Yeah,
that.
yeah, there you go. You found it. It's weekly, not weekly.
Previous weekly candle. I put a wheelie. I don't smoke, guys. Apologies. I don't smoke. I'm
You go gardening.
previous weekly candlestick. Okay. So the previous weekly candlestick closed bullish, right? So let's measure it from high. Now, excuse me, let's mark it up. Previous weekly high, and we do a previous weekly low right there. Okay. Oh my goodness. All right, there it is. From here, we automatically will go to the step 2, 4-hour chart. Okay. So we can read what kind of movement we had on that 4-hour chart. And if it truly is, right, a bullish momentum movement, a bullish movement. So where that's why you guys start at the week, because the edge of these lines will represent the start of the week on the 4-hour. And what structure or what, if you draw any trend lines there, here's where you can look for structure points, draw trend lines, and put a fib on it. Okay. So on step 2, okay, step 2, we can, well, first of all, let's add a fib, right? This is a bullet point. Add a fib. Actually, no, we can't add a fib until we actually analyze this. Here you can put trend lines. Here you can put structure points. And then last but not least, right here is where, and then you, based on those trend lines and structure points, add your fib. Okay. All right. So this is kind of like our window as well, right? Like how we use the S&T box. All right. So trend lines. We can connect that. Okay. We can also connect this. And there it is. All right. So then we start kind of seeing some patterns. So what about structure points? Well, what structure points do I see? It doesn't matter what I see in usage, is what do you see? It's most important. That's a low. That's a high. That is a higher low and a higher high. Pretty good, right? And now we could add our fib from low to high, which technically it is the weekly candlestick, right? Maybe you guys can complete this better than me. So the weekly low to high candlestick is the 4-hour structure points. N wave. Did I say that? Did that make sense of what I just said? How would you say it, Dan?
Yep, N wave. Yeah, you get the N wave pattern, and you get your direction of the market. So yeah,
So let's see.
and I put it up there too. Yeah, the N wave. You
The
got
N
your.
the N wave pattern. I
Mhm.
think you did give me a clue there of what I wanted to say. The N wave pattern is what? The low to high impulse, right, of the previous week. And that's the reason why I like to fib one candlestick, right? Because this movement here is technically the same as just one candlestick by itself. Yeah, everything's connected. Beautiful, beautiful, beautiful. All right,
And the
perfect.
beautiful thing about trend lines, just a quick little note there, is if you see, you already see it broke this little flag pattern. We know we're going to come back and test the support before we go to
Mm-hmm.
extensions,
And give or take, right? What is
give or
this
take.
area left? No, that's perfect. Leave it there then.
Yeah,
That is
well,
approximately
the 3/8. Yep.
38%, 50% of the
Mhm.
previous week.
Yep.
No, está
Beautiful.
bien. Le pones, tocas la, Pablo's asking how to kind of duplicate this. You basically touch it. You le pones command or what do you use, Dan? Control on your part? What do you use to copy a pattern?
Um, What do I use to copy pattern? I just did control basically
You're
control
you're
direction.
you're just I have a Mac, so that's how the keyboard is different. But I stop Pablo, seleccionala y pone command and control, hold it, and then just move it. Y copiarlo.
Oh, you mean on that? Oh, I mean,
Yeah,
okay, I get what you're saying. To duplicate something.
yeah, duplicate.
And
Yeah,
he has a
duplicate.
Mac.
I don't know. That's what I was asking.
Oh, so on a it's to control and just drag it
Yeah, control and drag.
on
Boom,
Windows. Yeah. Yeah.
boom, boom.
On a Mac, I
Oh
don't
wait.
know what it is.
Oh, you know what? Sorry, yeah, that was actually those are my teaching secrets. I shouldn't have said that. I'm sorry. I'm just kidding. That's what makes me an efficient educator as well, because I it goes pretty smooth. Anyways, what might the box look like on top of that? Oh, the 1 hour SMT, Dr. Treese? Is that what you're asking? Perfect. Yeah, and then here actually, Dr. Treese, that is the next step. Step three, check 1 hour SMT. Okay. If the SMT on the 1 hour time frame is countering, thank you, is not in favor of this too much, right? We may have to avoid that pair, right? The only exception could be gold because we trade gold all the time and it moves enough. So once we go to the 1 hour time frame and we add and we put back in there the SMT, it needs to be bullish, and it is. All right, so great. Oh, what is going on? So great. We're gonna focus on this pair today. If this was red, I would leave it alone in there and not don't play with the counter. Okay, because forex pairs are a little bit trickier to that. Excuse me. Um, but in this scenario, it's in support. And there it is. Beautiful. Look where the medium box is. Again, the strategy is fractal. Medium, your entries at the medium box. Now this is you have to wait longer, but it works the same. So that's good. Okay, so this one we can proceed with this one. And then from here, step 4, can't forget about ETM. ETM review. Okay. And here, this is kind of where now you go back to your daily. And then, well, what time frames did I have here? Daily,
4 hour.
yeah,
Oh, 12.
8 hour, 4 hour, and so on and so forth, right? Boom, 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 boom.
It should be a video by itself.
This one, yeah, it's a good one, right, Ron? We're gonna have the recording for sure. But yeah, I can trip this one down and just have that. And there it is, guys. But again, though, right? This only was born, right? Whenever Dan did that Monday study group, I was able to step back and kind of see what he was doing because he was doing the same top-down analysis. So as Dan was doing that, I was taking notes, and it came out to this. So thanks, Dan. Appreciate that. That helped.
You're welcome. It's great to double team like that and work together
Abs-
and stuff like that. Yeah.
Absolutely. So let's go to the 4 hour time frame now. Obviously, the step 4, and go to the daily. And look at that. Nice rally-based rally, guys. There it is. So we're finding our case for ourselves, right? To continue this buy to Dubai. So we have a daily Arbor R. 4 hour, I think that's a break of structure candle. Okay, it was a 12 hours, excuse me, 12 hour. 8 hour. Hold on a second. Nice engulfing candlestick there. We also have another. Let me just hide the box. So I do want the ETM candlesticks to come on.
Bearish BC.
See, I think it is one, right? Yeah, okay, it is on. Yeah, that's an 8 hour bearish BC equilibrium zone where price would like to come back to it. The indicator didn't call it, so I'll just leave it alone. 4 hour, let's see. We also have a drop-based drop bullish now ETM. So there was a lot of buying strength right here. Okay. A lot of buying strength. 2 hour time frame. And, it could come back all the way down here, guys. We know how gold can behave. But there it is. 2 hour BC. Perfect. Okay. And from this outlook, I won't go back too much lower than the 1 hour time frame, simply because we can wait for the ETM setups. Okay, from there. But yeah, this is very good. Very good. I like this, guys. I mean, I like the view from 2 hour on the Oanda chart. This is the setup for me. Boom, boom. Okay. Simple markup. And we'll practice this with 2 or 3 more pairs, and then we'll wrap it up. All right.
On that 4 hour bullish candle, you did the double fibs. You don't double fib that. Is it possible that you can double fib that? You got the weekly fib and then you got that long explosion, that bullish candle there.
Yeah, absolutely. You can definitely do that there, Ron. I mean, we can do that with the daily candlestick by itself, which will kind of put us around 78% of the and very near the rally base rally. On the 4 hour time frame, absolutely. Let's go ahead and measure that candlestick. And I'm glad you're seeing it now, man. You're seeing it, right? Measure that 4 hour candlestick, and it just slightly pushes up the percentiles a little bit. But again, though, this is kind of like that fib confluence stuff. But yeah, that's on point. Let's see, Dr. Latrice W. Yep, that'll be the setup right there. Dr. Latrice, that'll be the setup right there. W to the top side, boom. And again, I think this is also a harmonic. Remember, when you see W's, that's your X. That's
I
your
just
A.
gonna say it's a harmonic.
There it is. And this is a bearish. What did we say? W was bearish, right? But again, though, right, it doesn't have to come all the way down here.
No.
This, I think, if I'm correct, this is kind of like a crab pattern. A crab.
Not quite a crab. It's more like a shark thing
No, not a shark. For sure, not a shark.
or butterfly. One of those two.
Yeah.
Or the gantry. There's just too many of them to remember. All
Yeah,
the names.
there's the large. Yeah, there's a lot. Let's just for quick giggles here. Let's well, not quick research. Let's see if I can find. Let me see. Just a quick image on this. Forex crab harmonic images.
That's true.
And again, right, this is just kind of like with the textbooks. There it is, guys. You see? There it is. You see the little crab pattern? And the only reason I knew that, Dan, is because I know if you imagine a crab, right? The little guy is right here. Okay. And doesn't it have like a long hand? The crabs do,
Hand's longer than the other.
right?
One claw. All right. Yeah, usually.
So, so this is the claw right there. That's why I remember that. And yeah, that's true. That's why they're called that way, right? That's what they call that way, and they're called that. And yeah, and there's a one crab that has a long, like a deep crab, and that's a, it's a king crab, I guess you could say. But yeah, let me mark up some more, guys. Thanks for that comment there, Ron. Glad you're uh seeing, expecting those things. And again, but yeah, this is a bearish pattern that needs a reaction. And that's the reason why we can wait for the pullback, where if momentum is in our favor, right? We can counter to those buying zones if there's enough pips. All right. Let me go ahead and save this right here. Save that. See. SMT, top down. Standard variation. Save. Perfect. All right. So let's go over here to let's go to EURUSD. We'll probably stay here to about 840, 845 for the latest. Okay, guys. And we'll go ahead and use our, I want to see just to mark this up a little bit, get some practice in, and there we go. All right. Okay. So again, we just go by what the book says, right? This is standard variation one. We're not going to get too much tied into what kind of a candle it is and so forth. We're just going to stick to that. SMT, top down. There you go. Variation one. Rule number one: find the high and low of the previous weekly candle. Perfect. Boom. Previous weekly high. Previous weekly low. Got it. All right. The open to me is important. Okay. This is not staring away from the variation, but the open is important. Okay. And because the open is there, I'm gonna put it there. Previous weekly open. Okay. Perfect. Right there. What's next? 4-hour time frame. Now in the 4-hour time frame, we are gonna either focus on trend lines, structure points, and your fib. Okay. Only from here, guys. Only from the start of the lines to the right, nothing to the left. We can draw a trend line like this. Correct? Do we really have any structure points? We don't, right? We don't. We don't have any structure points in there. It was trending down and then it spiked up. So as of right now, it's only an impulse. And again, right, it still needs a correction. So which one would you guys say is, so can we confirm the bullish candle? What would you guys say? The bullish weekly candle. What's up, Dan?
I'd say, yeah, we could, because we established a higher high from the previous high. So
Perfect. I like that. Yeah, the impulse is pretty strong to confirm that. So I do like it. Very nice. So it passes. It passes.
for now, anyway.
For now. So let's check the 1-hour time frame. Did I erase my notes? I did. All right, perfect. The bullish SMT is also in alignment, excuse me. So I like it. It passes. All right, so now let's go to the daily chart. Yes, Dr. Latrice, that we had some news on Friday. And we have a BEC right here. In this scenario, I would get the wick because the body is very small. But again, these are just more, not to be precise, but to just get an idea. Okay, there it is. And again, the daily candlestick is the entire week. 12-hour. Look at that, Dr. Latrice. Look at that. What happened in the last time we saw a morning star like this? Right? What happened? Didn't it do a pullback? Got very near 61% and then pumped up. There it is. And I'm just scanning for ETM candles. Look at the rally base rally hanging out all the way down here. That'd be nice. That'd be nice. That RBR 2 hour. Two-hour rally base rally. And check this out, guys. Remember, if price does this, look at this. Watch this out here. We already got the impulse. It's going to do a pullback. Maybe it'll come back here. And then it's going to come back and retest what? It's going to retest maybe the 23%. And then from here, it may come back and get into the 61.8, 78% area. And what did we just form? An M.
M1.
Which
And
is
or
technically
harmonic.
which is technically a bullish harmonic.
Yeah.
Bada bing, bada boom. Hopefully you guys are seeing this, guys, how everything just repeats itself over and over and over and over again. There you go, Dr. Juice. Now we connect that beautiful institutional entry that comes back and retests the time the news spiked up. But again, though, you got to put a fib on it. So for this scenario, I would say maybe buy just below 61.8%. Stop loss here. And because I think we already would touch the 23% one time, I like it to the top. Perfect. Ready. All right. And let's go to GBPUSD. This is going to be very similar movement, in my opinion. But let's just follow our rules. Oof, this one was interesting. Previous week was bearish. Okay. Previous weekly high. Previous weekly low. I will take the open here as well. I'm probably going to refine the notes on that too. Just add the previous weekly open because I think it's important. Okay. There it is. Okay. Previous weekly open. High and low set. 4-hour chart. You look for structure or trend lines.
Oh, that's beautiful right there.
Nice little break right there. Perfect. What caught your attention there, Dan?
Yeah, the break of structure candle that's right at the previous weekly open and previous weekly high. It's perfectly marked out as a zone.
Okay.
So that's definitely going to be an area for a retest.
Perfect. All right, we got that there. Now let's see what SMT has to say after we slap our fib in there. Actually,
look
wait.
what we got here at the 618, man. Check that baby out. Oh, look at this. We got a nice flip zone right there.
Mm-hmm.
Which is right at 618 institutional levels.
This one's a little bit tricky, guys, right? This
Yeah.
one, I would say, is a little bit tricky in general for a couple of things, right? This is a strong, like the candlestick was bearish, right? The candlestick was bearish because, the low is down here and there goes the open, right? So it's a little tricky. Yes, this is a nice impulse, but technically this is the high and this is the low. So in this scenario, it's actually, we're at the 78%, right? We're at the 78% from this side, correct? Like so.
Yeah, that's true.
Now, here's the thing, guys. Remember, this is a bearish fib, but we can start looking for buys where? At the 23% level.
236.
There you go, Ron. Right?
Caught that by Friday at 236.
So where are the institutional levels now? I think it's okay to draw a bearish fib. Let it kind of get here. And I believe I'm pretty sure in the higher another time frame, that's one of Dr. Latrice's morning stars. We do have some ETM candlesticks there when we get to that point, but I like that. Okay, so I think we do draw a fib bearish. Let's go to the 1 hour time frame and see how this looks. And there it is, guys. We're at the 78, but we're at the top 23 percentile. Here goes the midpoints. Here goes the other 23%. And again, this could be something that we sell first and then see how it reacts for the buy. Okay.
And then if we complete that pattern, then we'll have our next harmonic.
Yeah, and hold on there, and simultaneously, this is why you can't correlate everything too soon, right? Because look at Euro USD was a bullish momentum box, but the British pound is a bearish one. So, all right. So this one, I would say, let's do the sells first. Okay, let's do the sells. No real setup on actually no. Let's go down. Let's go up to the daily. I'm gonna do this one, and you use the JPY, and then we'll wrap it up. Look where we came up to, a drop-based drop on the daily time frame. And then you got to run rate. We'll put this on the recording as soon as possible for you guys. I know that Donald, first time here. Hopefully you enjoy the session, man. Thanks for the support on joining our legacy group. We can welcome him in as well. Drop-based drop. Da-ba-da. There it is. Let's go to the 12-hour chart. Ooh, look at this, Dan. A few flip zones right here.
Yeah.
A lot of flip zones right there. 8-hour. Oh, there goes Dr. Treese. I knew remember we were gonna find your morning star somewhere. 12-hour. The standard one. I always look for the standard ones first. Okay. That's what I always look for everything. So we have a nice little morning star there. Maybe we should start creating like a little symbol for you or something like that. Boom. Maybe we could do something like this. We came right on these stars. They're nice right there, an 8-hour one or something, 12-hour. Yeah, I think we're just gonna find a way to correct itself. That's all I can say. Yeah, there's not many. I don't want to go too deep down the rabbit hole with the ETM candles below the 1 hour time frame. But yeah. Okay. I like it from the 8. Okay. I like it from the 8. Excuse me, the 12. The 12. Just kind of give this broad view of things, and we'll tackle it during the trading week. Copy link. GBPUSD. And let's just go to UJ, and we'll be done here, guys. All right. Weekly candle. Let's not let the noise scare us, and let's just push through with our rules. Previous weekly high. Previous weekly high. Previous weekly low. And the open. So the reason why I do the open, right? Because there's a lot of volume there that price likes to react to. All right, from there, 4-hour chart. And yeah, it's no real trend or anything. We did break some of this. Okay, and there's no real structure either. You don't want to count too much to the left, but we have a very strong impulse, right? We have very strong impulse to the downside. This one, I would say we can fit this direction because this low, okay, this low here, this low was the entire week basically, and there it is. Previous weekly candlestick right there. Beautiful. Let's go to the 1-hour time frame. Okay, perfect. So again, right, this one is where we were like, all right, you know what? Previous week was bearish. The direction of the fib is bearish, but the box is still bullish. These are one of those where like we gotta let this one go. Okay. There are ways to review it, but I would say because of the forex pair, let's leave it alone. And not continue because of that. Okay, because I don't like that. We have a bullish SMT box. We have a bearish week. I'd rather just leave it alone. All right, until we get some more data mid-week. So, good example. And with that, we'll just wrap up the class. So, appreciate everybody being here, guys. And I'm proud of you just getting back as well. So, welcome back. Um, we're on the Discord. I think you should be in the legacy group as well. If not, we'll get you in there. Any questions? If you're a legacy member, you can always use that legacy chat to communicate. You always have access to me directly if you need anything. But try always the legacy chat first because I may take a while to longer to respond. But other than that, guys, I do appreciate the support. We're moving forward here with the trading and any other updates or changes, you'll be the first to know. So we'll close it out. Everybody have a great Sunday morning. Close out the week. And Nico, I know you're jet lagged maybe, but glad to have you back. Glad to see your name here. Have a good one, everybody. Thank you.